Hey everybody, welcome back to Ryan Makes Sense. Today we are looking at ticker symbol DIS. This is Disney. They do have earnings tomorrow morning. I wanted to get ahead of earnings, look at the current price, see if it's worth $114, if it's worth less or more, what institutions and hedge funds are doing, and just look at overall technical indicators and run my calculation to see what the potential stock price of Disney should be. Without further ado, let's go ahead and hit the subscribe button and start. Okay, so looking at Disney, we can see, interesting, the price, the candle of the stock is right above the midline of the Bollinger Band, but also below the 50 SMA. So that's pretty interesting in terms of pinning the stock to a certain price. I wouldn't go as far as to say manipulation, but it has been consolidating between 106 and 122, right at around the midline of 114, ever since last earnings, where we can see a huge influx of volume, 60 million shares on the buy side. Um, and also looking at our indicators before earnings, we can see the strength was getting stronger. And as we're going into this earnings, we can see the strength had a consolidation period, but it has jogged up over the past few days. We can see our momentum is turning upward. It has been kind of consolidating again with our black line here, looking to overtake the red line, meaning we could see some movement in the stock price going up. Our money flow, look how much money has left the stock since, gosh, April. Just it went from oversold, or I'm sorry, overbought to oversold. Now it's at 38. It's going to be interesting to see how it trades today. If it can get closer to 50 or above 50, I think Disney is looking good. And we can see our relative momentum indicator has just gone down from overbought around 90 to now 43. Again, if we can get that over 50 today, I think Disney is looking really good. In terms of where we can see the stock going on the upside and the low side, looking at potential gaps to fill, I'm just going back on the chart to see where there have been gaps to fill. And again, remember this stock it got as high as 122. So any gaps higher than 122, we want to take a look at. um, right here, 134 actually looks like a gap. Right here. So 134 in the near term is a number to consider. 134, just keep 134 in your head. And right here, 173. Yep, 134, 173. Okay, so if we are going to the upside, let's say Disney has an amazing earnings. Ooh, look at this candle though. 134 and 170, whatever the number was I just said, is our gap ups. In terms of gap downs, where the stock could potentially fill on the gap down, we could see this get back to 99 right here. So you can see there's a huge gap, and typically, not always, stocks will fill their gaps before continuing upward. However, stocks have continued upward without filling gaps before. So on the downside, I think we could see this go down to 99. Maybe 83, 85. So those are our near to midterm targets. I think it all depends on this earnings. Um, and again, if you're just playing earnings like buying and selling, it's a huge risk to do that because they could have, made an investment into their sales team, their parks, crews, etc., and depleted a bunch of cash or moved a bunch of cash around, reflecting negatively or positively in the stock. You could be long or you could be short. So playing earnings is always a gamble. I would say if you are bearish Disney long term, look at options there. If you want to own Disney for the rest of your life, look at the long side. So um, that's where we're at with those two targets. This definitely looks like a hangman candle, but we like to look at the bigger picture of the monthly. And the monthly is showing us something interesting here. It almost looks like a bearish engulfing candle, but it is not. So a bearish engulfing candle is when you have the body of your most recent candle encapsulate the candle before here. So you can see the bottom side encapsulates the bottom here, but the upside, it does not. So we don't have a true bearish engulfing there. A true bearish engulfing could look something like this right here, or right here where the red body eats the green body. Or conversely, if a green body eats a red body, kind of right there. Um, so yeah, I'm just looking for patterns here. So looking at the overall candle, or I'm sorry, the chart, we can see Disney is actually having a hard time getting above the 50 SMA on the monthly chart. It tapped it twice and it got rejected. Um, so that is something to note. Our monthly strength is at 53, which is great. That does give bulls to the buy side a little bit more confidence. Our momentum is also coming to a make or break point on the monthly. We could see this continuing, this upward move continue higher, or it's going to be a short lived momentum move down where we can see it rose from 80 to 125 and may consolidate lower. The money flow is at 50, which I mean, that's the most that it's been since end of 2021, which is good. And again, the relative momentum, it scraped the bottom of the barrel for gosh, a couple years, and it has now moved up. So a little bit of a mixed signal on the monthly. If you are just trying to put things into perspective, the stock is trading at the same levels as it was in 2015. So if you have been in this since 2015, you might be thinking to yourself, wow, this is the same value as it was 9 years ago. You know, just think about it all comes down to you, your risk tolerance, your time frame of investing. So for me personally, I do own some long, but it's not a lot. And I don't see enough data yet to get excited about this. Again, those exact same reasons are the reasons you would want to be long a stock where it's kind of moving up in the shadows. I mean, it moved up 50+% in just a few months. So could it do that again? Absolutely. Could it go back to and fill those gaps at 98 and 85? Absolutely. Could it rocket up? Absolutely. Actually, rocketing up and rocketing down, maybe. There is 1.8 billion shares float, meaning it takes a lot of powder to move this up or down. Okay, so we're gonna run my calculation here, and this is going to essentially tell us a target for this stock. And if you're asking yourself, how did I come up with this silly calculation? I worked at a microcap company. Every 100 million in sales was equivalent to $1. I include the market cap when it is over 1 billion because it does make a difference. So we have 208 billion in market cap, which is great. Plus they have 2,998,000,000 in income, and they do offer a dividend, which I have my opinions about, but Disney is one of those value stocks where you want to have it in a more stable portfolio. So 2 billion income, and they do 88,570,000,000 in sales, which is crazy. Okay, that is correct. And now we're going to go ahead and look at their cash and debt. So they have, and this is all USD, correct. Okay, they have 14, so plus 14 billion, 182 million. All right. Total debt. is 45 billion, so minus 45 billion 565 million. Yes. All right. So we have that. Let's take a peek down here while we're I should look at quarterly. It does make a big difference on the cash side and kind of here. So we are going to revise this. So apologies. We're going to take our 300 here. Okay. And I'm just going to add 0 plus. Okay. And we're going to add, and again, this 300 was up from our numbers here. 208 plus 88 is 296. 297 plus 2.99 is 300 million, or 300 billion. Okay, plus they have 7,192 in cash, but they have 41,603 million in debt. What just happened? 41 billion 603 million. 1 2 3 1 2 3. Okay, that's correct. All right, and then looking at their total assets, 197 billion assets, 92 billion in liabilities. That is more than 2-to-1 ratio, where their assets dwarf liabilities 2-to-1. There are some companies out there that have 10x that, which is great. For Disney being a dividend stock with massive debt, which they are addressing their debt. Look at the end of 2022, they had 48 billion in debt. Now they're down to 41 billion. They paid 7 billion off in debt, which is great. Investments matter. Drinking coffee, not a sponsor. All right. So that's that portion. And again, I didn't really cover this yet, but sales, you want to see this up and to the right. We can see their earnings per share took a hit in the lockdown area, but it has kind of, it's plateaued, but you know, again, 2024 is going to be a crucial year. Shares outstanding have kind of increased 300,000 shares in the past 5 years. It went from 1.8 billion to 1.83 billion. So 830 million from 800 million. So yeah, 30 million increase. Okay, so we're going to now take this and we're going to divide it by 1,830 million. And we're getting that number right here. So it is, my calculation says Disney's target price is 145. That does get us close to our gap up area. Actually, where was that? I'm losing sight. And while that's loading, we're going to look at institutional numbers. So we're going to let that load. The gap to the upside was, no, it has higher than that. Come on. Right here. Right there, and also right here, 134. 134, 170 area. So that my price target of 145 is not bad. Analysts have a target price of 126. Wow, it looks like UBS and JP Morgan have a calculation similar to mine, but I think mine's a little bit better. Okay, and so 145, I like that, but if I were to own, I do own this long, I wouldn't mind throwing in $100 before earnings just to get this price. If it goes down, it goes down, but I'm gonna hold Disney for a while in my long-term portfolio. Okay, so institutions own 67%. That is old data. I call it old data because FinViz does not update as often as this website. So remember 67% old data. New data says 72. So we do see an increase of 5%, and you can kind of see right here, it looks like this is the most institutional investment we've seen since the end of 2021, and that coincides with our money flow. Let's go back to the monthly. Okay. So our money flow, again, it's gone up. The last time it was this high was, again, the end of 21 right here. You can see that. So that is good news. I'm going to guess Vanguard and BlackRock own quite a bit. I'm going to guess they have added to their position. Yes. Total guess, by the way, I did not look this up before. They did add 5 million shares. Vanguard did. BlackRock added less than 2 million, around that. So that's funny. They're the only the large filers here. So anyway, that's my thesis on Disney. I do own this, so I'm not really biased. I do think it could go either way. I'm more of a technical person, so I do see this double tap right here as a sign of resistance. I do think this stock going back to 80, 90, and 85 would be healthy, only because it went from 80 to 122 in a matter of 6 months. 1, 2, 3, 4, 5, 6, 7 months. So yeah, I think it could have a breather for sure. And it is trading near the upper Bollinger Band, and the midline is around 95. So a breather wouldn't be bad, but we're also seeing record level and, well, 2021 investments by institutions and hedge funds picking up. So I honestly think this could go either way. Don't trade this just to have a gamble on earnings. If you're long like I am, it wouldn't hurt throwing a few bucks in before earnings, and it also wouldn't hurt throwing if it goes in lower. Again, it's trading at the same levels as it was as 2015. And yeah, I'll let you decide what you want to think. But if you made it this far, consider subscribing. Thank you for watching. I really appreciate it. Have a great week. And if you're in this one, good luck. Adios.